all of you hear me and see my screen clearly? If you can, don't mind just typing in the chat box. You can type a yes or Y, one. Yes, I see. Yes, from Law. Yes, Yong Chiong. Thank you. Thanks for all the response. Everything is functioning well. We will just go ahead. So once again, my name is Nixon. Welcome to tonight's session. Tonight is the kick-off of our Learn from the Pro series for the year 2023. So for some of you who have been attending our session, you will know that the Learn from the Pros is a series of education that we have been bringing to the public for the last 3 years. So this is actually Learn from the Pro series 3. And we are delighted to have with us today Mr. Wong Kon to share with us a bit more about the market itself and specifically the AI rally. So before we start proper, let me also just share some resource information with you guys. So the Learn from the Pros, as I mentioned, is a series of workshops. This year, we're featuring 3 experts from the market. We have Mr. Wong Kon. We will have also Mr. Ho Sing Fu and Chua Wei Ren. If you go to this website, you can have information of all the speakers that will be lined up for you, and we'll be putting them up. You can register directly for the upcoming webinar. So allow me to just get the link for you on a while. So you can either use the QR code to scan, and you can then see the link, or let me just put in the chat box here. So this is the URL for the Learn from the Pro series. So you can always come back to this page. All the webinars available will be there for you to register. And when we have recording, we will also be uploading this recording onto the same website, so you can have a chance to review the presentation as well. But also qualified, not all presentation will be recorded for review, because some of them are so-called intellectual property. For example, the next session that we have is Mr. Ho Sing Fu. So Mr. Ho is a trading representative with close to 30 years experience in the market. And he actually has a workshop called the Super Stocks Trading Methodology Workshop. And we have arranged with him such that he will share his basic trading methodology workshop with us through a 4-session workshop on this Zoom platform under Learn from the Pros. So if you can look at the date, it will be from 7, 14, 21st, and 28 September. So from next Thursday onwards, every Thursday for this month, we will be able to learn from Mr. Ho Sing Fu. So do register for his workshop. His workshop, the recording will not be shared because this is his intellectual property. So if you really want to learn his methodology, do register to attend the workshop live. And next, we also would have Mr. Chua Wei Ren. Wei Ren is an analyst with CGS-CIMB, and he specializes in technical analysis. For some of you who are client of CGS-CIMB, you might already be getting his report almost on a daily basis. He would have his research report on Singapore market, US, as well as Hong Kong, and why he sees it as a potential buy or potential sell. And when we do the Learn from the Pros charting markets with Wei Ren, this is an opportunity for we all to actually ask Wei Ren directly, why does he have this view on this stock or that view on that stock? He will be taking the opportunities to also look through the trade reports that he has put out, why the buy call, why the sell call, and how they have performed. So this is going to be a very exciting series, and we aim to do this on a monthly basis. So when towards the end of the month, we will get Wei Ren to come back and review all the trade calls that he has made for the prior month. So this will be something very, very exciting. And before we start, allow me to also just share the disclaimer. So bear in mind that whatever is presented today is for educational purposes only. It is not an incentive or a recommendation to buy or invest in any product or assets. So do bear that in mind. So if you are looking to make your trade, do consult a licensed financial advisor or your broker. And without further ado, we have our guest for today. He's none other than Mr. Wong Kon. Kong is a founder and investment strategist at Weipedia Private Limited. Prior to that, he has vast number of years of experience trading since the CIMB days on the floor, and then following up with a sell side with the some of the broking houses in Singapore as well. And also, he has worked with many institutions, financial institutions, both in Singapore and around the region. And also, I understand that also collaboration with Nasdaq of US as well. So maybe you can share a bit more about that. So he is very valued by all the financial institutions, and we are very honored to have with him here with us to share his view on the market. And just to remind everyone, we will be taking questions after Kong Hao's presentation. So if you have any questions, just feel free to key in the Q&A box. And when we go through the Q&A segment, do feel free to just ask questions as well if you want to. So with that out of the way, let me pass the stage to Kong Hao. Kong Hao, you can take over.
Thank you, Nixon. And let me just share my screen. Okay, so I think I'm the one that feeling very honored to be here with Nixon, with CIMB tonight, and of course all of you for tuning in. And I understand that today we also have quite a number of university students that is tuning in today. And okay, so just go straight to the topic here. I think tonight I just want to give you beyond the AI rally, because AI rally is part of the deal, but there's something beyond that. So let me just give you a structure of what I'll be sharing tonight on the AI rally itself, and what is perhaps going to eclipse on this rally to come. Of course, that's inflation. And today I'm also going to talk about commodities and crude oil, and of course, CIMB asked me that if I could also share about the Singapore stock market as well. So I will also share that is AI related, which is inflation related, which is the commodities related as well. So then followed by a Q&A towards the before 8:30. So I have exactly about 45 minutes to share right now. So I'm going to move on very quickly. And so what we're going to see here is that I study a lot into the behavioral price movement, because to me, the price itself represents a lot of things that's happening within the price, fundamental developments, psychological development, events, insiders trading. So the price behavior, I would say that based on this analysis, later I'm going to share a little bit about quantimentals. What is quantimentals? Basically, it's quant that we recognize patterns and fundamental. When you combine the both together, personally, it just benefit me. And usually when I say long-term, and with this analysis, usually a bit early, but it's always good to be early so that we can prepare for what's coming ahead. So when I say long-term, I begin to realize over the years, when I say long-term, when I apply this behavioral science analysis, usually a bit 2 years early, which is good. So it get me prepared what's coming ahead. When I say mid-term to short-term, maybe I think I'm a bit usually about 2 months early. Okay, so today I talk between the both, between long-term and mid-term, so that hopefully can get ready what is coming up after this AI hype that we all see today. So it's always a pleasure to share, and in every platform I prepared, and I don't take it casually, because it gives me an opportunity to share to my listener, my viewer, about how to create a lateral thinking skill. That means we got to think beyond what we learn in school or in your institution. If you're a CFA holder, you have a wealth of knowledge, but I want you to think beyond what we actually know in the textbook. So today I will demonstrate that, how to work. And let me just go straight to this AI hype that we're in today. Okay, so before we talk about AI hype, when did it happen? It happened at the crossover of 2023. Can you see that? At the crossover, it went up. And let me just bring you back to a very scary moment that we all experienced 3 years ago, which is the COVID-19 crisis. And the market, I'm referring to NASDAQ, but same thing for Singapore as well, that those years, just less than 3 years ago, that we experienced this fall. Is it already 3 years? Yeah, I think it's 3 years already, right? So we experienced this fall. At the point in time, it's so scary that we do not know what's next. Yeah, so we have lockdown all over the world. We have stock market crashed. It seems very bad, but what I'm trying to say here is that, but we have forgotten, really we have forgotten that how bad it was. And then, of course, the Congress and the Fed came in with this pandemic stimulus, and the market rallied really big time that we could see here. And to recap as well, 2020-22, it was also a very significant year as well. That was just last year. So what happened to the whole of last year? We could see that since the beginning of last year, the market entered into a bear period, the whole year. Yeah. So it was the beginning of the rising inflation. And because of that, inflation keep on the high. It is also a beginning of rising interest rate all over the world. So the market went into bear. And then crossover to 2023, we have this AI hype. In January, no one talked about AI. Yeah, but in March onwards, the AI rush came in. So now what really attribute to this first and second quarter of this rally that we saw is AI rush. Yes, so that's one of it. And also the other two attributing factors, they are the inflation seems to be cooling off, ending the inflation hike cycle. It means that most of us do not see that the interest rate is going to continue to move up. Yeah. So the other one is that during March this year, the US have 3 very big banks that fails, and that is or was very serious. But from then until now, the bank run crisis seems to be under control. So the other attributing factor why 2023, the first and second quarter went up, it was because of also this inflation appears to be cooling, and also bank run seems to be under good control. Now, let me just talk about AI hype. Then at the end, we'll talk about the AI technology stocks as well. So, but in between, I think I'm going to spend a large chunk on what's coming ahead, what's going to eclipse on this AI hype. Of course, that will also give a lot of resistance to this AI hype that we're in right now. Now, it is because of the release of ChatGPT. Because of that, I find it so useful. I do my research here. I do my webinar. It's very helpful. I do my translation with ChatGPT. I like it so much that I subscribe to it, $20 a month, which is really useful. So now this caused generalist investor like myself, yourself, to suddenly wake up that AI extraordinary potential. That seems like there's a long run way to go, which is true. And it was a moment when everyone, I'm referring to everyone that uses computer, that finally got a touch this technology. Now, compared to Bitcoin, cryptocurrency, those who understand, they understand. Those who don't understand, I think a huge chunk of investor, we do not understand about cryptocurrency, but I do appreciate the blockchain technology. And no need to say about NFT. So to many of investors, this cryptocurrency NFT, it is like a very fluff kind of thing. Of course, there's also, because of that, there's a lot of scam, but it was also a percentage of genuine business development there as well. But to many of us, cryptocurrency, especially NFT, is just fluff. We don't quite understand. So I don't quite understand about NFT as well. But come to ChatGPT technology, this is the first time we got experience. It's so close to us, and we really like it. And for that reason, those companies that are able to produce the high-end chip to support AI, it scored the point. So we could see that a lot of companies went up because of this hope. And it just started after this bank run, after March, the market rally because of this AI technology. So if you ask me if the hope is still there, definitely, it's just the beginning. But the rest of the evening, what I'm going to discuss about is beyond this AI hype, what is going to eclipse, that means to shadow this, that means it will hit some resistance, because AI is just a sector. It is it's not the whole economy, because the whole economy, it is what is coming right ahead of us is the inflation, which I have been talking about it over the last 2.5 years. That's why I say that when we use behavior analysis, usually I realize over my track record, I'm always about 2 years early for my long-term view. So about 2020, I start to advocate that inflation is pumping up and that may arise to higher interest rate. And that was 2020. So we saw that in the year 2022. In March, that was when the first time the Fed started to hike the interest rate, followed by the rest of the central bank around the world, also follow the US, also hike the interest rate. Now, let's talk about this AI rush again, beginning of this year. And there's also another fundamental reason why there's this rush. This is what I call the balance of the hot money. And I can share with you in the next slide is that this hot money is no longer there. So it was a balance from this pandemic stimulus, a lot of hot money flowing around. It's the last leg of the hot money that also push up this AI rush. Now, let me just share with you this very important chart here is that I think many of us may not be aware that, in fact, the Central Bank of the United States is the #1 customer of the US bonds, not China, not Japan. So central bank itself printed money to buy the bonds issued by the Congress. So what you could see here is that these are the money printed by the Fed to buy into different instruments that we could see here. This is the QE1, QE2, and QE3. So over the years, we could see that the way they print money have never ceased since QE1, QE2, QE3. It kind of stopped there. And then it kind of stagnated for a while. And finally, they decided to stop printing money in 2018. But because of that, it also means that the hot money is no longer there. And for that reason, in 2018, you can refer back to the US market. The 2018, the stock market also came off. So we have to recognize that the hot money, when it stopped, so it will be for the stock market as well. So then we saw that they try to do that because they know it's unhealthy to keep on printing money. And the stock market fall, then they resume back to printing money again. Yeah, we could see that. Until 2020, what was the event? Yep, that was COVID-19, right? Then they have to resume very quickly, which was a good thing because it saved a lot of companies so that the employees can continue to have their job. And it stopped again. They try to stop it, because they know that if they continue to do that, inflation will pick up even more because it's in the formula, if that you're going to print more US dollars, it's just going to dilute the currency. When money is diluted, inflation will pick up. Yeah, and that doesn't help that because US dollars is a international currency, is a reserve currency. That's why I think all over the world, we're facing this inflation now because of all these money printing. Now, then they realized they have to stop. So in June 2022, last year, that's more than a year ago, they stopped. But there's all this time lag. It will take it into some lag effect here. So when they stop printing, I would reckon that now the stock market, US stock market is still on a high, then there is a divergence here. So I'm not seeing risk, although I'm sharing with you that, no more hot money means the market is coming down. But yes, there's a risk that market will come down. But since we already know that, you already know that the hot money is no longer there and the stock market is still elevated, I'm not seeing risk. I'm seeing opportunity. Why? Because we know what is the risk lying ahead. Therefore, I'm seeing opportunity. And maybe for the US stock market, this will be a good time. It's still elevated to take profit, to take some profit. And of course, for CIMB, they have a CFD department. You can always consider to hedge or short if you belong to the traders group as well. So that's what I'm seeing here. Now, let me just switch this off. And let me just go to the next slide here. Now let's talk about inflation. And earlier I said, if you notice the grammar that I use, I said inflation appears to be cooling and bank run seems to be under control. So, and are they? No, they are not, okay? Inflation is not cooling at all. In fact, how do I know is that, just to give you a little hack here, I hope I can have more time to explain to you about yield curve. But I don't have the time to do that because the focus will be something else tonight. After AI rush, how can we navigate around? And how can we still get into AI's stock market later on? Now, so briefly, I'm going to explain to you how I know that the inflation is not taming at all. The trick is you can apply this trick. So please jot it down. It will be helpful in the months and years ahead. As long as the yield curve is still inverted, that means the inflation will be still on the rise. There's always a risk that the interest rate will be higher. And is the bank run crisis over? No, the bank run crisis don't seem to be over yet. I'll share with you in a very short while. Let me just cover about the inflation here. Is that looking at this US float rate or the federal fund rate. In Singapore, we are aware of the float rate. Of course, I believe there's a lot of undergrad or university students that is attending. In time to come, I hope that you'll find a good career, you'll find your spouse, and you get married. So there's nothing wrong to apply for BTO or this and that. Yeah, it's part of the life process. And I really encourage that if you find a partner, get married soon, get started soon, have family soon, build up a career. Don't wait, because can you imagine if your family, quickly you get started, you can enjoy life much earlier. Okay, I do not know how you see who I am, how old I am. I'm 51 years old, but I'm very excited because next year my son is 21 years old. So I think we can have more time, me and my wife, to enjoy life together. So I believe that I'm going to grow up to 100 years old. It means that after the next 49 years to enjoy life a little bit more. Okay, so putting that aside is that in Singapore, today I just received inquiries that, Kon Hao, should my loan rate, the bank is asking for loan rate because they are on borrowings. He's also nearing my age, 51 years old, but he's stressed over all this kind of thing. And he said that, should I choose float or should I choose a fixed rate at 2 years? So now, how do I know that inflation is on the rise is this? Now, traditionally, the further end, which is 10 years, 2 years, 10 years, 30 years, the interest rate or the loan rate traditionally is the further the term, the tenure, the higher the rate. Yeah. And traditionally, the float rate, it got to be lower. But this time around in US and Singapore, things have inverted. Okay, the heck I'm going to share with you is that how do I know that interest rate or inflation is still going to remain elevated? Is that whenever the yield curve is inverted, I know that the inflation problem has not been solved. Now, so for the first time in history over the last 1 year, it started this yield curve inverted about 1 year by now. The float rate, you can just take it as Singapore float rate, is higher than the, of course, for us, we use 2 years tenure, but for US, they use 30 years tenure. So just give you some numbers here, because this is a real information that my friend asked on behalf of his brother, who is about just a few years younger than me. That he say that the float rate today is at 4 to 4.5%, and the 2 years tenure is about slightly above 3%. So of course, that's never happened before. That means the near end, the float rate is higher, the loan is higher than the 2 years. So never happened before, right? So this is what I call inverted. Now, not to get into this. So the whole idea about demonstrating this slide is that to let you see and understand that how do I know that the inflation is not solved yet the problem, because the yield curve is still inverted. So where's the yield curve? And this is US. Yield curve is the one in light blue. And you could see that the light blue is higher. The rate is higher than anyone else. Okay, so light blue. So when did this happen? It was in the 80s. So of course, the 80s was the last major crisis. So for the last 40 years, the whole world have a peace and prosperous year. Yes, I know that I'm painting a very, very gloomy picture here, but I want you to see the point here that if you know the risk that's coming ahead, it is not risky. To me, it is opportunity. I hope that you understand that. So now, this is about inflation. How about bank run crisis? Now, and I'm going to look at the bank run, and this little arrow here is in March this year. Okay, March this year, there was this bank run crisis. Then now JP Morgan, it went up, it broke above March level. But over the last few months, it's been coming down again. Or over the last 1 month, because it's a weekly chart, has been coming down again. And let's look at the other top 8 banks of United States. And by the way, in United States, there are 4,000 banks, at least 4,000 banks. And these are the top 8 banks of the 4,000 banks. And what we are seeing here is that the top 7 banks from the March crisis, they are all still below the March crisis. Can you see that? And Citigroup is almost breaking below the March crisis low. Now, these are called price behavior studies. So is all these top 7 banks are all under pressure and it's not performing. So when we study into the price behavior, when you look at the concept of price of the United States banks, and I know that the banking sector are not doing well at all. Okay, so the banking crisis to me is not over yet just by looking at the price. I may not understand what business they are doing. Out of the top 8 banks in the United States, only one, which is JP Morgan, is above the March crisis level. The rest of the 7 is under. How about the other 4,000 banks? I can only make an assumption that they are also just like the other 7 banks that we're seeing here. So this is something that you may want to keep track. The bank crisis is not over. One of the reasons that we saw the first and second quarter, it went up, it was because of AI hype that comes subsequently. The first reason is because the inflation seems to be taming. Number 2 is that the bank run crisis seems to be over. But what we have discussed here is that inflation is not over at all. Inflation fear is not over. Bank run crisis, I still have to check on it from time to time, because what happened here is the March bank run crisis. It started with SVB, and SVB is the rank, I think, the top 20 banks in the United States. So it's a large bank, top 20 out of 4,000 banks, it is a large bank. And the other 2 is also relatively large. So a large bank can fail. So that kind of ring a bell as an investor. I have to keep track of the banking sector of United States, because banking sector, it is one of the backbone of United States. And 2007, 2008, their crisis, he also give us some warning sign in 2007. 2007, there was also 3 failed banks first, followed by another 25 failed banks in 2008. Yeah, so that's what happened to 2007 and 2008 crisis. So every time, whenever there's something that there's a crack, we have to study into it more intimately. Will that lead to further crack? So the crack is not exactly solved yet. So we just have to keep on eyeball it very closely from weeks to weeks, month to month. Now let's take a look at the CPI, which is the US inflation. And this is starting from the year 2000 over the last 23 years. And in fact, if I can stretch to the last, since 1982 to before COVID, if you can see that the inflation number of the United States have generally stayed at the average about 2%. But after the post-COVID, something happened. The inflation started to rise to about 9%. That was June last year. And 1 year on, the market started to fall, which is the inflation seems to be taming, which was good, is stopped at about 3%, and over the last data up by about 0.2. So inflation is still quite all right from 9%. So what Jerome Powell wanted to see, that it wanted to come down to about 2% in a sustained manner, means that it do not want it to fluctuate. Inflation, he do not hope to see that it fluctuate like this, but he want to see that inflation, something like this, fluctuate stably around this price. Then he will consider to ease the interest rate. Why he do that? Because he's not seeing that inflation is over yet, because the rest of the West, the UK, the Germany, the EU, their inflation number is still at 6.8%. If you look at the UK, which is represented in rate over the last 40 years, averagely that inflation is also about 2%. But today, it is 3 times their ideal inflation rate. So looking at their ally, their partner, their business partner over there, to me, or to Fed or Jerome Powell and his team, that inflation is still, they're balancing on the red tightrope. If they are not careful enough, it may swing back up to what is the UK and the Germany and the EU, what they're experiencing today. So now let's move further. So what the Fed do not want to see is that, you know, every time after the FOMC meeting, there's always about 45 minutes to 1 hour of conference. And I could see that the reporters, the journalists are very excited. They keep on pressing an answer to this chairman the Fed chairman, is interest rate is going to cut. But Jerome Powell is very steadfast to say, no, I do not see that the inflation is coming down to 2% in a sustained manner. We do not entertain any cut at all. Maybe our pause, but definitely the rise of interest rate is still in the back. So what happened here is that the journalists, what I could see here in every meeting, they keep on wanting to hear an answer that from Jerome Powell that the Fed is going to ease or cut interest rate. So you got to understand here is that most of the journalists, they're very short term. What they're looking at was last year, June, at 9.1%, it fall to about 3.2. They find that it is okay to cut rate. Don't let the rate maintain too high. But what Jerome Powell and the team and myself are seeing, and yourself tonight are seeing, is that we are looking at the long-term rate, very long-term, not just the last 14 months. We are looking at the last few decades. Now, so what Jerome Powell do not want to see here is that if you read into his conference very intimately, is that he do not want to follow his predecessor. And that's what he said. So what happened to his predecessor? It was all this former federal chairman. So inflation, this is inflation, that used to, at 12%, come down to about 4.5. But the Fed at point in time, I think they're too anxious. They find that the inflation may be under control. And then, of course, at the point, they hike the interest rate, just like the US did today. But as inflation fall, they start to ease or cut the interest rate. And the moment they do that, so what happened then, it was the inflation started to went up the roof, going beyond the former high at 12%, it went up to 15%. And for that reason, the Fed fund rate or the float rate in the United States in 1982, it went up to above 20%. Can you imagine that your interest rate, the float rate, your housing rate, float rate is at 20%? It ever happened before. So what the central bank today do not want to follow predecessor is that they do not want to be complacent. The moment they cut rate, they want to make sure that everyone else outside the United States are fine. Yeah, because the world are interconnected. Everyone is fine. The inflation is under good control, really good control in a sustained manner. Then they will consider to ease the interest rate. So I hope you are seeing here that inflation is not over yet. I hope that I have more time to share a few more, but I think I want to focus on the Singapore market as well. So now, apart from CPI, that most of us know, but I think over the last few meetings, Jerome Powell also focused a lot about PCE. Now, what is PCE? He also looked at PCE very dearly. It represents personal consumption expenditure, that it covers a broader range of goods and services compared to CPI. So CPI is important, but in the same time, he also look into PCE. Yeah. So, but the PCE number is not exactly good at this point in time. Now, compared to CPI, PCE provides a more sensitive measurement of inflation. Now, so his mandate this time around, compared to 2007 and 2008 during the last crisis, it was the Fed printed money to save the companies, to save the Wall Street, so as to keep the company afloat, to employ the American people. But this time around, their focus are very different, because their focus is for the American people than the Wall Street, because the inflation is still on the rise. And he said that they want to have this two mandate. Number one is to promote maximum employment. And number two, they also want to make sure that the price are stable for inflation purpose for the American people. So their focus this time around in 2020-23 and onwards, it will be stable prices. They want to make sure that the inflation, it is in check to protect the American people. Now, so you know that his mandate is to keep on looking at inflation. Okay, now, so what happened here is that we talk about PCE. Now, PCE, there's a lot of numbers, but since we talk about American people, I want to also look at, I do not know specifically which PCE is looking at. But since it's for American people, and I kind of interest me on the housing and utility, and I look at the housing and utility over since it's 1985. So over the last 40 years, the housing and utility is about 3% average. Yeah, so this 3%. But today, the latest numbers still stand at 7%, which is double of the norm. So therefore, he not just look at the CPI, but he also look at many other numbers as well. So for that, I think I just conclude the risk of inflation pressure, it is still there. So do not be too complacent. Now, let me just now go into the macro about the commodity prices. So where is the opportunity right now? If I find that, of course, inflation is still on the rise, interest rate hike is still in the game. If with high interest rate, stock market ultimately will face a lot of headwind. Okay, so you just got to be careful. But where's the opportunity? Because in every crisis, there's always opportunity. And to me, it's very simple, because if inflation is on the rise, what are the assets that were also on the rise with inflation? So it is commodities. Now let's take a look at the next chart here. We saw gold. I love gold. And crude oil compared to, I put a starting point during the COVID crisis. Because COVID crisis, all the stock market came off, everything just go haywire, including the commodity prices as well, because of the backlog of the bottleneck of the supply chain. So from the crisis of COVID-19 to today, gold is still going higher. Crude oil, it seems like it's turning up. And soybean oil has been higher. It seems like the last few months, this is a monthly chart, has been going up the last 3 to 4 months. Soybean, it may not means a lot to you, but for many other people, soybean is in many products, oil and bean. So it's the meat prices. Now, all these are the raw prices. So for us to hit the market, it will take a few weeks to a few months, not immediate. So last month, as I look at the meat prices, the cattle price was on the rise. So I go to my Ghim Moh market there to check the ribeye prices. The butcher still quote me at 420 with some good marbling there at 420 per 100 gram, which I'm quite glad. So it haven't really priced in yet, but I think in some weeks or months to come, it will price in. So, but please don't go and hawk all the prices, yeah? So I'm just trying to show you that the commodity prices is still on the rise. So is the hog prices. The corn, yes, come off a little bit, but compared to COVID-19, it was higher. And the rice, I think the last quarter talking about the rice is higher, but you notice that only today, we start talking about last Sunday, I visited my dad. My father is 84 years old. He started complaining to me that rice is getting expensive. But last quarter, we already spoke about rice. Rice prices is on the rise. So, but now the rise that we could see is actually coming off. But the actual market, people are complaining in the stores that the rice prices are rising. So there's always some lagging effect there or here. Now, so let's look at the crude oil. And what's the crude oil now? Okay, so there's so many commodities to talk about, right? But I want to narrow down to one, which is crude oil. And then I will go into the Singapore market itself. Now let's look at the crude oil. The raw prices for crude oil is that I prepared this since 1980s. And this is a yearly chart. Say, oh, Kong, how do you study into yearly chart? Yeah, I study into all time frames. Sometimes if I have time, I don't want to trade. I will look at a 5 minutes, 60 minutes chart in a very short time frame. But most of the time, I look into very long time frame from yearly to quarterly to monthly to weekly, and also to understand what is the whole micro development. And I'm going to see whether there's a relationship between what I'm seeing and the development. So you're going to see quantimentals here. What is quantimentals is that we recognize pattern and we try to also weave this recognition of patterns to what is happening to the fundamental development. Okay, without any clue, can you tell me that you seeing something here? Maybe I just give you about 10 seconds. There's something interesting behavior. I just want to point to you, but I'll give you the answer anyway in a short while. Okay, the clue is this. Now, this is a yearly chart. So what can you make up of this yearly chart on its behavior? I'm seeing a very interesting dynamic in the crude oil over the last 10 to 20 years. And I could see that the oil prices, unfortunately today is still in a very cartel format where a few players come together and they could control the price, which is no good, but that's the way it is. Yeah, that's cartel market. And now what I could see here is that the oil prices has been going up, trying to break above 100. But as it broke above 100, that year itself, it kind of hammered down. So for many years, they have tried. Means that the group of supplier, they have tried to break above 100. That means it is in their desire, just based on this price behavior study. To me, I interpret as is in their desire that they want to go above $100. Of course, because they are the supplier. When oil price is higher, they make more money. So there's nothing wrong with that, but it's pure business transaction here. So, but each year they try, but it kind of fall below. Each year they try, it fall below. Each year they try to fall below, and this year they tried that year they tried, it fall below. And that was during the post-COVID, they tried again. Yeah. So after the opening up the supply chain, the oil price went up, and last year it failed. So you can see that there is a concerted effort that they are trying very, very hard. They want the oil price to go above 100. But I do believe that if they try hard enough, it may. And especially in the global inflation that we are still living in, that may happen, especially by the supplier. And who are the supplier? Which is the OPEC Plus. And from what I see, the geopolitics, this OPEC Plus have never been so united before compared to the past to now. Today, they are so united. They can come together and command that they want to cut the production, and they do. So in this report, which is latest by SP Global, they cut the report to the lowest point in August 2021, and they will continue to do that. So now in commodity prices is such that one of the element is that when there's lesser supply, which is they are producing lesser supply, with the same demand, lesser supply, the price will go up. Okay, so that's how it goes. Now, and let's get ready for the next move. We spoke about AI rush, which is the hot thing, but don't get too hot that you overlook into the bigger picture. So what I share with you here today is that the bigger picture and the more concerning picture is the inflation leading to a rise in interest rate. Because of a higher interest rate, the bank became a problem, and they have a problem. And that's what we saw the 3 failed bank in March, is because of a higher interest rate, they fall in a problem. And because of this high interest rate, the commodities, to me, it should be ramping up in time to come. So are you ready for the next move? So again, I paint you some factual picture. Give you some data point. I hope it's good, but I do not want you to feel very burdened about what's happening, because my objective is also to lighten up your burden here. So I only have this, hopefully it's a wise statement here, is that if you know what is the risk ahead, which we have discussed about it, then we should not be seeing as a risk. We should see that what's opportunity to come ahead. Now let's take a look at what was my strategy since the 3rd week of last year. So basically, since the last 3rd week of last year, I saw that inflation has come, and therefore a higher interest rate will come. So which it did happen, and I think will continue. If not, it's not over yet. Since 3rd week of last year, yeah. So then my campaign, even today, is still the same, because I just received an email about last week saying, Kon Hao, you seems to be quite bullish on Asia. Are you still bullish on Asia? I say yes, even more. I'm more bullish, but not exactly bullish. Let me share with you why. But moving forward, my mandate since the 3rd week of last year is still the same. For US market, as it continue to rise, I will continue to take advantage to cash out the old holdings that I have. But since it's so volatile, I do enjoy trading them from time to time. Yeah. So in short, is that I find that the US market, there is some divergence, that we look at the macro numbers are not doing that well, but the US stock market is still on a high. So there's some divergence. So be prepared to have seeing some headwinds or some trading opportunity coming up. That's for the US market. Now for the Asia market, when I say to accumulate them, now notice that I didn't say to buy them. To accumulate them means that I'm also not very sure. Why do I accumulate the Asia market? Is because I do not see that if the inflation continue to rise, therefore the interest rate globally continue to increase, that will bring a headwind to the stock market. But why do I accumulate Asia market? Because Asia market do have a lot of good stocks. I accumulate them because I do not think that the Asia market will have a hard landing if based on what we've discussed all come true. But for the US market, if you're too into it, and there's always a risk that the hard landing may hit the US market. But Asia market, I'm not exactly sure. I do not think so. There's a hard landing. Therefore, I am accumulating them. Okay. Now, how about commodities? To me, is straightforward. Since last year, third week of last year, I advocate commodities to buy them. Okay, now let's take a look at, with this understanding about Asia market, is this. Now, so I just want to introduce you to the SGX website here. You can take a picture on a QR code. There's this feature I like a lot, which is the ETF screening. So what you could do is that you go to this link, you can screen, you can choose the different region or different country, whatever that appear to you. For example, if I list Asia Pacific, they will give me a whole list. Of course, the list is in abundance. I think there's more down here, but I just screen capture it. So what I can do is that just study one by one until one of them makes sense to you. So what you can do, there's these documents you can open up and read at their prospectus. So of course, you can call the fund managers to ask them, so what is it all about? Okay, hopefully to entertain you. And those who do not entertain you, you don't have to invest in their fund at all. Okay, so yeah, so this is what I can do. And because ETF, something about ETF is that if you find that picking stock is quite a bit of work, because depending on your profile, some of you are busy, then you may consider ETF. So for Asia market, I'm still accumulating them. So some of the ETF, they also pay dividends as well. And of course, if you have the time, you can go into the individual stocks that pay dividends. So basically, I'm not seeing huge capital gain to come, but I do believe that in time to come, which is I do not know when, I think Asia should do well. Yeah, there's a transition from the West to the East, I believe, looking at the way it is happening, but it's going to take a long time. So therefore, I'm accumulating to the Asia market, not for myself, but for my next generation. So in case that I go back up to my maker, whatever I have, you'll be is a very Asian culture here, is that my children will inherit whatever I have. Now, so this is the ETF screening. Now, the next one is, but you're going to ask me, what about tech stock? Now, my recommendation to you is that tech stocks, because of this AI hype, a lot of tech stock now, it is at a high. So my advice is that the AI, especially AI, e-commerce, EV, there's a long runway to go. But the hype has come to a point that is so hyped up, is a bit overvalued. So you may choose to wait for a little while, because we had discussed about the macro development, about interest rate, about bank runs, about inflation, that may overshadow, the whole market may come off. So my take here, for if you have not get hold of any AI stocks related, don't rush into it. You may want to wait for the next correction to pick up later. Now, so there's this feature which I like a lot. If you find that difficult to choose, then you can do some work with the SGX stock screener. I put up a QR code here. So what I can do is that I can go to the, let me just shift this to the filter. If you can see here, click the filter, it will drop down. And I deliberately choose 3.5%. Why? Because my fixed deposit, so I do have fixed deposit. I do reserve some cash as well. So my fixed deposit, I roll it in a 3 months roll. That's my strategy, because I believe that interest rate will still continue to go up. So I do not want to fix for too long. Neither is too short. 3 months is just right. I want to do it 3 months, roll on roll. Keep on rolling the 3 months. Now, 3 months right now, I think the best rate that among the banks that I have is at 3.5%. So therefore, if I want to invest in the AI's any stocks, I will choose 3.5%. So these are, then you'll list all these technology stocks in SGX that offer me at least 3.5% dividend payout. Okay, so now then on this, there's also a sector select. So what you can do is that you can select the software and IT service and technology equipment. You will speed up your work to identify which are the stocks, tech stocks that give you 3.5% dividend and above. Okay. Now, then let me just talk about commodities before we go into the Q&A segment. Now, commodity, when I say buy them, you can again choose the sector, which is you can choose energy, fossil fuel. They will list down a few. Okay. Now, I'm just going to move to the next very practical slide about the commodity. What's my view right now? So earlier, I presented the yearly chart of the crude oil. So when we buy into energy-related stock, it's important to study the benchmark. Benchmark is that we study into the crude oil prices itself. Now, let me apply about the quantimentals, which is pattern recognition plus fundamental development. Now, usually, like I say, when mid-term to short-term, usually about 2 months ahead. So at about a few months ago, I saw this, and I saw that for the first time, OPEC Plus announced that they're going to reduce oil supply. So today, August, they're still talking about that. So that was the first time they said they come together, OPEC Plus, to reduce the oil supply and the market gap up. I find that this is interesting. So then I wrote an insight on this community. So every week I wrote insight to this community. And so that's why I wrote, I say oil gap is a game changer. So that's my projection. The oil should go up from there. Maybe it will do some retracement, but ultimately its objective is to break above 100 and trend up. So that's my projection based on technical and also some fundamental development on the reduction of supply. So where's today's view here? As I click here, today's view is that we are quite right. So the market did do some retracement now. And today I think it's about 81 or 82 US dollars. So do keep a close look at the oil prices. With inflation, I believe that commodity will continue to rise. And with the war, it don't help. And with the OPEC Plus, it doesn't help at all for consumer. Okay. So oil is, from what we discussed, there's a chance that it may continue to move up. Then that will lead me to the individual stocks itself. So you see, when we look at crude oil, if you're going to trade the crude oil, of course, you can buy into crude oil ETF related product. But for oil futures, are more towards for short-term trader if you trade the oil futures. Then the other one is that what you can do is that look at the oil energy stocks. So these are the energy stocks that I have, in fact, the exchange float these energy stocks to me. And which I find is very interesting here because if I look at the crude oil compared to Rex International, which also include the market cap and their yield, or PE, whatever the exchange website provide, I'll just leave it there for you to have a reference how big they are based on the market cap. But I want you to see that their relationship between them and the crude oil itself. So earlier I did mention that if you want to invest in all these energy stocks, you also have to understand where the benchmark is heading. So we have discussed that the benchmark, it may be doing some retracement, it may be on the way up to 100 US dollars. And over the long term, it may continue to move up. Now, when we study into mirror this with the individual stocks, I'm not too sure you're seeing this. I'm seeing Rex also mirror the crude oil. As it move up, it retrace. I think it's going up. So is the Joe Energy retrace. Same period. So is the PH Petrol Gas. So is the Golden Energy. I think there's a little bit more downside to come because of this inverted hammer. So is this recently, I think SGX and the Thai exchange has agreement. They roll out this SDR, which is Singapore Depository Receipt. It means that from now, these are very huge oil energy stocks listed in Thailand, but without any major migration to list in Singapore. So there's agreement. They created this product called SDR. Basically, you can buy it in Sing dollars. So it's identical to what you're buying it in Thai Stock Exchange. So this one you can take a look here. And 9R, it used to be, is a bit different from the oil stocks. Why? Because it used to be a offshore marine, which is energy stocks. But after that, they have changed it to AI-related business to retail business. It means that from now, 9R is not offshore marine at all. But I want to see the relationship when it was a offshore marine stocks, but after they changed the focus, the stocks never pick up. Whereas the energy stocks are in relationship with the benchmark, which is the crude oil. And China aviation, I do believe that recession is still in the game plan, my game plan. So with recession, I think that the aviation will slow down. So this is one stock that I do not think that it will go up based on the oil price. Yeah. But again, all this analysis, I can be wrong, but I just give you my insight based on my comparison between the different energy stocks and crude oil. So last of all, in a challenging time with high inflation, perhaps higher interest rate to come, what other stocks can we take a look at? I think not forgetting about the millennials and the Gen Z to come. They have a heart for environment, so they will form the liquidity in this segment as well. Okay, so this segment is still quite new, and you can take a look at these ESG related stocks, but recently there's also a lot of ETF that's coming up. So this is one of the ETF that I think I like quite a bit. Of course, you can always ask CIMB, CGS-CIMB, what is this all about? Basically, you don't have to look at individual stocks. You can just consider the ETF if you're into ESG stock on this, especially the low carbon Asia Pacific related stocks. So with that, we're going to enter into time of Q&A. But before that, let me just share with you some point that if you find that what I shared tonight make a lot of sense, that you want to continue to tap into what I know. So I have this Facebook page. The Facebook page name is my name, Kon Hao. Join together so you can like it. So today I just shared a new topic, interesting, and it received a lot of eyeball. The new topic is because someone literally this morning asked me about between float rate and fixed rate for the housing loan, which one should he choose? Yeah, so I cannot give him an answer because I'm not a banker. So what I did was I give him some pointers, ask him to decide for himself. I show him a chart. So since I've written that for him, then must well also share on my Facebook page. So I did quite a bit of sharing almost on a very regular basis on the inside of the market. So you can go and visit my Facebook page. So every week also produce some videos about 6 to 7 minutes on the what's happening to the market, the correlation of the market, and how to take opportunity. And for those who like to like what I share, I also have a segment on trading. Yeah, so if you like short-term trading, look for that playlist on trading. If not, every week I will share about some macro development on my YouTube channel. It is called Invest and Trade with Insight. And I believe that on the YouTube channel, you can search my company name, Weipedia, will pop out as well. So that's my website. For more in-depth resources, you can always visit my website, weipedia.com. And definitely, if you find that what I share, if you become intrigued at how I connect the different data point to form a bigger picture, to form an opportunity. And on your end, if you find that you also have some insight you want to share with me, feel free to just email me what you see, and I will enjoy to spar with you on all this insight. So I'm just going to pass this time back to Nixon on the next segment on Q&A. Maybe I think we just take the next 10 minutes to do that. Yeah, because supposed to schedule at end at 8:30, but I think I'll overrun. So sorry about this.
All right. Thanks, Kong Hao. There's one or two questions and a few questions from me as well. But before we do that, let me share my screen first. All right. So I just want to share with everyone, besides the ETF that Kong Hao mentioned, the low carbon ETF, CGS-CIMB has also recently launched, actually this was only listed last week, Vietnam ETF on the Singapore Stock Exchange. So this is the opportunity to invest into an emerging market in Asia through an ETF, which otherwise it will be very difficult for retail investor to actually have an investment in Vietnam. So Kong Hao, I believe this one will actually be one of the things that we can actually look at as well, right?
Yeah, just share Vietnam is part of the Asia that, like, if you talk about China being the largest manufacturer of the world, I think Vietnam will come in second. So yes, I talk about invest in Asia. Vietnam is definitely one of them. Yeah.
Yep. So do take a look. You can get more information from the QR code or just go to our CGS-CIMB website and you can find more information. And before we start the Q&A section proper, there's a little request that we like everyone to do. That is for all of you to fill in the feedback form. We really appreciate this for a couple of reasons. One is, of course, we want to know how you feel about the session. And also, we'll be inviting Kong Hao back in about 2 months' time. And if you have any topic in mind that you really want him to cover, you can also let us know through the feedback form, and we'll definitely take that into consideration. And the second reason is, more importantly, this feedback form allows us to substantiate this Learn from the Pro series so that we can keep it on running. We've been running for the last 3 years. This is the 3rd year running due to the support from all the participants and the feedback given to us. So we really hope that you can give us feedback so that we can actually substantiate and hopefully bring Learn from the Pro series next year as well, series year 4. So do help us with the feedback form. Allow me to also just get you the URL for that and put in the chat box. Okay, hold on. Yep, so it's in the chat box. So really appreciate all of you giving us feedback. So with that, we can go with the Q&A, and I can see that the questions are coming in. So allow me to just look through. There's one very quick one early on in the chat box that Kim Chiok asked. While Kong Hao was sharing about Asia, Kim Chiok was asking, does Asia include China for you, Kong Hao? Does it include China?
Yes, definitely. China is actually one of it. And I think there's some China question here. Might as well just take them all. Okay, I think many of us do not understand China here is that, now, first of all, I have to make this clear is that I do not take sides. Whether I like China or I like whoever or I like Singapore, I do not take sides because I think as an investor, if you take sides or if you have special liking or certain country or because you have an ethnic group there, I think it's the grave mistake if you take side. Now, as an investor, I do take side on only one thing. As an investor, I take side on my own reserved. So all of us have reserve or saving, we call it, right? But reserve since sounds big, so I like to call my saving as reserve. I only take side on the reserved. Whatever have a greater potential, I will flow there. That's about it. Yeah, so earlier I say that I think since about 2 years, my mandate is already there, that I will prefer to trade the US as it go higher, I will cash out in US long-term holding. And I will want to move into Asia to accumulate Asia. And I want to get into commodities. So this have not changed since 2 years until now. So now let me just talk about China fundamentally is this. Since about 2020, I start to advocate that inflation may come. And it didn't happen at point in time. So people thought that I'm mad. But now people start to appreciate that, oh, Kon Hao, you're right. In 2020, you start to talk about inflation is coming. So it came. And you also write that the interest rate is now higher. Yeah, so therefore now I receive a lot of questions about should I fix the rate or not to fix rate, but I can't answer them because I'm not a banker. Because they remember that 2022 at the beginning that I asked them to fix it at 1.6%. They remember that. That's the 2 years tenure. Now, going back to China is that since 2020, I really advocate that the inflation will come. I believe that the think tank in China are seeing that as well. So what they have done in 2020 was that they clamped down all these activities on high leverage properties and all these people of China, the retail investor and homeowner they got it mixed up between a home and investment. They rush into buying a home and caused the price to escalate. So what China did was exactly what I'm doing over the last 3 years, is to deleverage. Because if I know that interest rate is going to be on the rise globally, what I do is that, which I have done, honestly, I've no loan on my housing. So I live a much free up lifestyle right now, because what I see is coming. Of course, when the decision that I want to pay down my house, I do have a bit of disagreement, a good disagreement with my wife, because my wife is always on leverage. Then I told her that when time to borrow, we borrow. When time not to borrow, we should not borrow, because there's all this investment cycle. So I believe that China are seeing that they start to deleverage, including right now, since that the global inflation is not over yet. It means that the global interest rate will be still on a high. It's good that they deleverage. Of course, that will cause some problem, which is now China have this problem. But I always believe that the problem may be short-term, but it will gain a long-term goodness over the long run. With a global rising inflation, you got to keep your debt in check. That's the rule. And the good thing about Asia, why I invest in Asia, is because Asia, most of the Asia country, we have one thing that a lot of other world do not have, which is we have strong reserve, especially in Singapore. Now, in a rising inflation, rising interest rate, of course, it will cause a lot of headwind in the asset classes. So one way to counter them is that the government must have good reserve. So which I believe that China have some reserve. Of course, reserve, it is always a secret. They will not reveal how much reserve that they have. So I just want to say this about China. I think that will actually give you the answer to many of the questions on China, whether should I invest in China tech stock. So the same answer to you is that yes, but please select the good tech stock. Most tech stock do not pay dividends. So that's the game. But do accumulate them. When I say accumulate them, means that you don't just buy one shot, you just buy some. Because once you buy some, you get in tune with the company, you will receive their company report. Because you already have a stake in them, you will start to be more aware what's company doing. So if you find along the timeline the company is still good, then you can continue to invest in the second tranche, third tranche. When I say tranche, sounds very big, but it could be just a few $1,000s add on here and there. So I hope that will answer, I think, many other questions relating to China.
Thanks, Wong. I think there's the question in the Q&A box from Anonymous. I think his question probably is what's your take of China tech stock that is listed on the US market? Because I think there has been some hoo-ha over the past about the political issue with US and China and the threat. So what do you think? What's your take on that?
I think that's my concern as well. If you have China stock listed in US, their relationship is no good. So it's the factor thing. But if there's a dual listing in Hong Kong, I think I will prefer, anyway, the price, I think the differential is not great. So what you can do is that since the relationship have turned sour since Trump days, and if you are holding China stock in US, and there's always a risk, and they may sabotage each other. May not come, but if it comes, at least you're prepared. So if you have that, you're concerned, then if you have the concern, then you got to trust your own feeling. But the good news is that whatever they list in US, they also should have listing in Hong Kong as well. So what you can do is that you can do arbitrage, sell there, buy into Hong Kong. So I think that will ease your concern. So I will do that. If that's your concern, then just do that.
Okay. A quick question from YT is there ETF investing in Mexico? I'm not aware from the Singapore perspective, but what's your take on how?
Okay, I can just find out from you doing ETF, Google, Mexico. Okay.
Probably
not know. So what I do is that you can check with there is apparently. I just Googled, it's not from me. From my Google, it says that there's a iShare MSCI Mexico ETF. So if you like Mexico, which I'm not very familiar with Mexico, the South American part, use Google. So after that, you got your listing, then you go into the individual ETF to study the prospectus. So because I believe that Mexico more than I do.
Right. Okay. I hope that answers the question. From Silly is when Hong Hao you're presenting about the hot money flowing in and flowing out. The question she's asking is, I miss how to know the hot money no longer there. So she's asking, how do you know that the hot money actually stopped? And
I think sometimes we attend webinar. I also attend webinar as well. So because of one of the webinar attended, that was some time ago. So this presenter presented a hot money as stock. So I researched into it, and it's true. So maybe I just show you that the slides again.
Right.
Let me just share the slides once again, where I presented that hot money is no longer there. So what I did was, all these are free information. And let me just get hold of the slides. Okay, so I just Google about Fed quantitative tightening. Yeah, so some source will come out, and this source from this website called Fred. I think this good. It gives a lot of data for free. And what I could see here is that basically this one belongs to, now read into heading, it says that the security held outright US Treasury by the Fed. Okay, so means that the Fed printed money QE1, QE2, QE3, and then it decided to stop printing because after QE3, the whole economy of US are good. They don't have to keep on doing that. So finally, they decided to reduce their holding. Yeah, that means after all this bonds expire, they choose not to renew. And then after that, when they do that, the stock market in 2018 also start to come off. Then they find that that's no good. Then after that, they start to print money, the stock market go up. Then of course, with COVID-19 hits, the stock market crashed. They printed more money, which is not wrong. Yeah, it's the right thing to do. But come to a point, they have to stop again. So this time around, they've stopped since June 2022. They have stopped printing money. And I think then the other question that I think some of you may be very interested to know, that if the stock market count down, can they resume back to printing money again? I think this time around is very difficult. I do not have the time to explain to you, but you think in terms of the debt to GDP ratio, the debt as of now, I think it's about 32 trillion. It should not come down. It will be always there at 32 trillion. And the GDP at the moment is no good because the export number for United States has been coming down. In fact, my latest reading for the United States, the export number is worse than those of COVID-19 at the peak. It means that they're exporting much lesser compared to COVID-19 days, which is export. Part of the equation for export is GDP. Part of the equation is export is needed. Since export is down, I'm expecting that GDP will be down in the coming quarters. If GDP is down for too long, recession will hit. So part of the things about debt to GDP ratio is that the debt is always there, 32 trillion, but the GDP also seems to be lower, and that became a problem. But if they continue to print money, it will just cause more misery to all these numbers. So I think this time around, Fed moving forward, they are in a very difficult position to consider to print money at all. So time is different this time around. That's what I felt. So it'd be interesting to watch how Fed is going to navigate this in the context of recession hits with inflation on the plate. Yeah, so that's something, a very challenging formula and question to address. So I'm just going to pass this time back to you.
Okay, great. I think we just take one more question. It's from Feng Luo in the Q&A box. He's asking, if I need to select only one commodity to invest to hedge against inflation, which one listed in your slides, Kong Hao, will you recommend? Gold, crude oil, etc. Which one, if I can only pick one?
Okay, I think very good question. I will not limit to one, but since you want to press me for answer for one, then I just have to look
Your
at
best choice.
yeah, I just have to look at whatever I have. In terms of the ratio, the most is gold. So yeah, so I have gold, and of course in SGX they also have a gold ETF.
Right.
But I think the good news is that you don't have to limit to just one, because now I think you can buy into micro products. So if you have limited resources, you can break down into micro to buy a bit here and there. You should spread out a little bit, not too much. So if you ask me about why gold, let me just share with you another chart that we maybe just take this as a last question because it's late. Why gold is, look at this relationship among all the commodity prices. Let's look at this demonstration earlier. Or did I miss that? I think I missed that. Yeah. So among all the commodity prices, which one is the most elevated? From crude oil, soybean, meat, pork, corn, rice. It is gold. Yeah, gold is leading the pack. Yeah, gold is leading the pack. I know gold a lot of people don't like because they do not pay dividends. And maybe you can consider the gold mining companies. So they have some gold mining companies in Singapore as well. So one of the stocks that are listed in Singapore market, there's also have this gold mining as well. So you go and look for them. Look for the gold. So this is a homework that I task you to do. Yeah. So okay, so I gotta pass the time back to you, Nixon.
All right. Thank you, Kong Hao, for your, again, a fantastic sharing. So just a quick reminder, I hope all of you can help us with the feedback form. Again, I will putting the URL on the chat box, and we probably would send an email following the end of this presentation to everyone who participates, so that you can also give us feedback, as well as register for the upcoming sessions that you may be interested in. As I shared early on, we will have next week, Hosting Fu will be sharing with us his proprietary super stocks trading essential. And then following that, we will also have chatting markets with Rayron. So with that out of the way, I'd like to thank everyone for your participation, for staying with us. And of course, definitely thank you, Kong Hao, for your insightful sharing and taking on all the questions from the floor. Right. Thank you, everyone.
So maybe I just also want to rally on behalf of Nixon here, is that the feedback form, not about myself, but because I'm an external speaker of CIMB. So if you could just feedback truthfully, so that I do hope that CIMB are able to come to this platform to continue to share with you, to give you an update what has going to happen as down the road. So your feedback, I think, is very important. So thank you so much for that.
Right. Thank you, Kong Hao.
Thank you.
So thank you, everyone. So tomorrow is polling day. It's a holiday. So I hope all of you have a good polling day, as well as a good long weekend. Okay, see you all. Bye-bye.